What if we actually see a potential default of Evergrande? What does that mean for Chinese markets? Does it have a big impact?
Sure. So like your colleague Sonia just mentioned, Evergrande bonds are trading at 20 cents a dollar. So I think that bond market is realizing that the restructuring is going to happen. And I think that that is pretty much going to be the base case for markets from here. So I do think that if this is going to be evolving just like that with Evergrande, I think the impact on market is manageable. But I do think that the risk is that if we see a recovery rate that's much, much less, and if the whole process is more disorderly, then market may start to look at other developers, and I don't think that is a risk that it's yet priced in the markets.
Yeah, Julie, I think it was Morgan Stanley yesterday that revised their earnings forecasts for the developers there. I mean, for investors, would you advise them to just wait out until the dust settles on this?
Yeah, I mean, I think that for the property sector, our view is that we know that these equities, these bonds are super cheap, but we don't know whether the risk have completely receded or even have been priced in fairly. So I think that our view is that for tactical short-term play, it can be very dangerous. And from a long-term perspective, there is just so much uncertainty with regard to a lot of very leveraged developers. So this is a sector that we would be very cautious on right now.
Julia, I mean, valuations, as you say, they're cheap for a reason, and it's this overhang, of course, and we're talking about an industry group which probably represents in total about 28% of GDP of China. It's hugely important. So if you do get invested in it, where do you go? How do you actually mitigate that risk?
Mitigating the risk of investing
into developers if you wanted to go there, for instance?
I think that our preferred strategy right now, if you are interested in having some participation in arbitrage potentially, is to invest in the broader index. So for example, the JACI Asia High Yield Index, so that at least you are diversifying away from single property sector or single company risk. But you're benefiting from the fact that there may be some companies that are collateral damage, and in the end, maybe they won't be as bad as market fears. So I think that could be an opportunity for investors who want to arbitrage that valuation gap. But you have to diversify away the single company risk.
But let me just take a look at what we saw yesterday with those retail sales numbers and just weaker data, just generally than anticipated. A lot of talk that it was bad news, which became good because people began talking about perhaps a triple R cut. Now, what camp are you in on that?
I think it's very likely that we see triple R cuts. I think the interest rate market seems to be pricing in some kind of rate cut as well. I do think this can all happen, but the question for us is that they are a little bit behind the curve relative to economic cycle. So unless the PBOC moves ahead of the curve, it's not going to have a huge amount of impact on market expectations. So I don't think this in of itself can really outweigh the impact of regulatory uncertainty.
Despite that, though, despite the slowing economy, despite the fact that we get this regulatory risk right now, we're seeing a renminbi that is still quite strong. We're talking about more than 5-year highs from the renminbi against the basket, and people are attributing it to a lot of these foreign inflows that are actually still quite resilient, whether it's stocks, bonds as well. Does it stay that way?
The foreign inflow numbers have been pretty resilient. I think that you can probably guess that a lot of these inflows are very long term. So they're looking at valuation much more than investors that are in the broad investor community, which sometimes look at more tactical opportunities. So long-term flows, I think, will continue because China's economic financial opening, I think, is motivated by geopolitical concerns, motivated by the need to have an open capital account. All of these are longer-term structural changes. So I think that will continue. But I do think for the RMB, as well, there's that very strong trade balance flow, which as long as the pandemic remains the way it is, it's just going to persist. So the FX is really a reflection of that.
Yeah, I'm taking a look at some of your top conviction calls. Modest upside in U.S. and Europe. Your top pick is in DM is Japan equities. It's been going gangbusters, right? But there are some signs that perhaps this rally has been looking a little overheated. How are you viewing positioning now?
So our broad thesis is that developed markets are okay. They may be going sideways, but they're going to be okay because they're mid-cycle, positive, accommodative. And typically in that environment, you can have an opportunity with catch-up plays like Japan, which is still lagging US and European markets by about 10%. So we think that if the US market goes sideways, Japan can catch up. And we already have started to see foreign flows coming back to Asia ex Japan. So I think, including and Japan as well. So I think that the foreign flow will also be a positive factor for Japan.
Julia, final question. We've been tracking energy prices, I mean, oil for obvious reasons, and then last couple of weeks, of course, what's been happening in natural gas, and I think prices have quadrupled. The reason I bring that up, it goes into the larger inflation story. It's been many, many years since investors had to calculate returns based on inflation because inflation is here to stay. Do you think this will simply force more investors into commodity markets and stock markets? How are you approaching the inflation equation?
Yeah, I mean, this inflation trade has came back in a very big way last couple of weeks. I have to say that, we don't have a whole lot of clarity in terms of when the supply chains and inventory problems will go away. So maybe this will persist. But fundamentally, we're actually getting a little worried at this point because there's not a whole lot of growth out there. If you look at China, if you look at Delta's impact on developed market. So the gap between supply and demand is actually widening. So we're getting a little worried that maybe this commodity run up is not going to last that long.